Hello, everyone. I hope you are all doing very well. Welcome to the Fintechs Finance Virtual Arena where we are hosting you today. Today, we're going to be taking a little look about putting banks back at the center of the consumer's universe. Because you hear a lot of the time, it's one of those fantastic sayings at conference that has a lot of meaning behind it. We're going to probably unpack it a little bit about how the big banks are becoming the dumb pipes. We want to break that down and have a little bit of a look into this. Joining me today, we have quite an esteemed panel of people. First of all, we have Kurt from Netcetera. Kurt, how are you doing today? Whereabouts in the world are you?
Thank you, Ali. I'm doing fine. So a lot of events these days, a lot of activities. And I'm really looking forward on this very appealing topic, because I think for banks, it is a really a very strategic topic to look into the wallet perspective, how the consumer interface can be kept at the wallets moving forward. So it's, I think, a very strategic, a very interesting topic, really looking forward to our session here.
Excellent, excellent. Also joining us as well from HSBC, we have Alex. Alex, whereabouts in the world are you? How are you doing today?
Hi, yeah, I'm good, thanks. So I'm based in Hong Kong. So really looking forward to this chat from a bank perspective. So I work for our e-wallet fintech startup, if you like, PayMe, which is released in Hong Kong. I've got 20 years of experience with HSBC, so hopefully I can bring a good banking-centric, entrepreneur sort of angle to the chat.
Did you say entrepreneur or intrapreneur?
Well, intrapreneur. I think you can be an internal entrepreneur. You know, I think there's nothing stopping banks from investing in that. I know a lot of the success stories are born outside of traditional banking in the fintech space, but get the right people, give them the right ideas, give them the right license. I think we're living proof that you can do it in-house.
This is what I love about doing these sorts of interviews. It's little comments like that kind of sort of stick with you, because if you get the right people, you enable them. The stuff that can be made, the progress that can be made is phenomenal. And lastly but not least, another Alex. We have Alex from Gatiragas de Front. Alex, how are you doing today? Whereabouts in the world are you?
Hi, Ali. I'm doing well, thank you. I am based in Helsinki, so I've been in this part of the world for 12 months, and I've been with G&D, or Gatiragas de Front, for 5 years in total. I originated out of the Australian office in Melbourne, Australia. So, loving this part of the world. It's a great place to be, and certainly seeing some great things happening in the payments world in Europe, definitely.
Absolutely. I was hoping you were going to say that you were in Melbourne today, so we can do the whole, can you flip them the right way up gag? But well, let's get straight into it. So let's talk about digital wallets first of all. To sort of throw this open to the panel, what is the current state of digital wallets, and within that, what regions are leading when it comes to innovation within this space? Kurt, did you want to go first and take this?
I'm happy to go first. I forgot to mention I'm based in Austria, so I'm looking more, let me say, from the European perspective to wallets. And for me, the first question is when we say who is leading in wallet, what is a wallet? And the definition of a wallet, because I think when you ask the three of us, we would all have a slightly different definition of a wallet. So let me give you mine first, and then we discuss on the market side. So for me, inside a wallet, you can do some payments. You can initiate payments, and this is either you have wallets, and this is my history. So I founded a company 15 years ago in developing wallets that was then acquired 5 years back by Netcetera in mobile contactless technology, that you have near field communication from a mobile phone that is then has an app that is called the wallet to do payments in the shop. So, but from this, they're doing, so to say, payments locally, mobile contactless payments. A wallet can do more and can also facilitate payments in e-commerce, can do P2P payments. And then what else is important for a wallet that has some kind of control panel feature? I was always saying around cards, accounts, so you can manage your security, you can authenticate to a wallet with biometric technology. And furthermore, then there is, once you have these core elements of a wallet, so being your consumer interface for payments, then you can manage these payments, you can control these payments, and you can also then put value-added services around these payments. And when we then even further look, then you build marketplaces around these payments. And that would be for me also the question, the answer to your initial question. So who leads in this innovation space? So looking here from Europe, I would say Asia is more leading in this space, but because when I then look to these super wallets or super apps like Alipay or WeChat, you know, there's payment, but there is also an ecosystem behind. There is a lot of functions around this payment, the marketplace functionality. So that would be for me, if we want to look into the future, I would go and look to what is happening here in Asia Pacific.
That seems like the perfect segue to go to Alex
Yes.
B. So obviously, Asia has got quite a big reputation down to a couple of QR codes that seem to have taken the country, well, the region by storm. Alex, just talk to us a little bit about where you see a digital wallet from your perspective.
Yeah, so yes, there's certainly a lot of wallets in Asia and some huge names as well. I think certainly for Hong Kong, the kind of concept of stored value it's not new. We've had sort of stored value here for around the last sort of 18, 20 years. But I think there's been a huge amount of innovation around the choice of payments for both consumer and merchant. There's the QR code payment technology, which is, I think it's certainly older, I think, than the NFC technology, but almost just as easy if you can design the right UI UX. And I think where we see innovation is around experience, around giving customers the experience that they want. I think because it's a saturated market, it's really the only way to sort of differentiate. And yeah, I think there's very much either the super apps kind of as mentioned, but each country in Asia certainly seems to have a sort of leading couple of wallets. I mean, for us in Hong Kong, Hong Kong is a very cash-based society. So one of our use cases originally for starting PayMe was to try and solve that. How can we be less reliant on cash? And we've built an ecosystem around enabling payment, which is proved to be really popular. I think kind of looking forward into the future, I think wallets tend to go on a similar trajectory. I think largely because of the margins in payments are pretty small. So if you grow and get customers, it's natural to want to open different revenue streams. So I think a lot of apps and a lot of payment wallets have been on this journey, but rather than kind of the kind of traditional, oh, should we offer a buy now pay later, or shall we offer a sweet product? I think one of the exciting use cases over the next kind of 5 years is going to be payment in the metaverse. Maybe a little bit cliche because everyone's talking about it, but it's all about that experience. So can you use payment in the metaverse today? Well, yes, absolutely. But what do you have to do? Well, you have to take your goggles off and you have to then to type in the credit card number. You have to have it saved. How can you have the right experience when you're paying for something without having to come out of your virtual environment? And it's back to experience. So that's going to be quite interesting to see designs on that over the next 5 years.
That's a whole other discussion, because I'm just thinking, my mind's racing now, thinking you could be analyzing like people's things like their individual movements and those kind of digital signatures that you're uneven aware of to be able to make pay. That's a whole other discussion. Alex G, let's go to yourself. Where, obviously from where you sit, where are some of the regions, but also what exactly is a digital wallet from your perspective?
From our perspective, it's I think first and foremost, because of our experience, it comes in with payment, as Kurt mentioned, but it's also then adding additional capability beyond that. And what Alex mentioned around the customer experience is very important. And certainly from what we've seen in conversations with many banks and fintechs across the globe, not just in Europe, is that there's additional emphasis now on that customer experience through the mobile wallet. Look, the website's still important. Banks still have branches, although a lot of those weren't visited over the last couple of years, of course. But certainly the organisations we're talking to are saying we're putting some extra emphasis in ensuring that our customers have an awesome experience with the wallet. And what that means is that it goes beyond payments, of course, is what other services can you provide for your customers? What other solutions or services can you provide to create that stickiness for them as well? So yeah, definitely a lot more emphasis on what can we do with the wallet to not only retain our customers, but grow our capabilities with our customers too.
I think we were talking about in terms of that that stickiness, because it is from a wallet now, it isn't just transactional. It isn't just, 50, 60 years ago, it was literally a little bit of material with cash in purely for transactions. Now there's the opportunity for a lot more elements in that. Alex, I want to explore some of these use cases and the opportunities that digital wallets have for consumers right now, with things like it's a buzzword, but a buzzword for a reason, because it is incredible and it is beautiful when it works well. Let's talk a little bit about embedded finance within wallets. Do you see that becoming a reality for non-finance brands getting into the industry? Or what's your take on some of the opportunities with digital wallets, with things like embedded finance?
Sorry, which Alex is that directed to?
Alex G.
Okay, great. So most definitely, there is opportunities for non-traditional finance players, big techs, for example, to start embedding finance. Gaming is a classic example of that. So being able to provide not only purchasing capability, but other means of transferring value as well. NFTs is a good example of that as well. So embedded finance, I think, is going to become a lot more important for all of us, and it's something that we as an organisation are looking at how we're supporting our customers with as well.
Excellent. Kurt, can I go to yourself around this point, what some of the opportunities are? And obviously, I mean, embedded finance is the words. I mean, we've just had Money 2020. It's probably one of the biggest talking points there over the last couple of days. Let's go to yourself about some of your thoughts on the opportunities for wallets.
When you asked me, it's a bit also beyond this embedded finance. Is when I look to the past. In the past, we have paid with paper or coins, and we have received a paper slip. Nowadays, we are paying digitally, and we are paying with wallets, but we still get a paper receipt back. And for me, this is a real burden. And if I look to this, for me, yes, exactly this. I think this is really a burden. And for me, when it comes to what would be new use cases that are appealing, it is really bringing a digital receipt to a wallet, and that has many aspects. Well, it has the ecological aspect that I think is more and more important. So not wasting paper and trees, but it is also a convenience aspect, and it is also that you build some connectivity between the shop and the buyer. So for me, and the wallet would be an ideal container to host the facilitation of these digital receipts. So for me, this would be a very strong motivation and a very strong use case in extending the wallet proposition for the future.
I wouldn't know how to do that, but I would love that. I'm a big bit of buy now pay later, bit of embedded finance. I'm a big advocate of Curve. My Twitter feed is often people taking the mick out of how much I love Curve, but it's kind of crazy thinking about that I go to a shop, I get a paper receipt, I take a photograph of that receipt to add on to the wallet when it's there's almost like a middle stage there that is not needed.
Yes, but taking this photograph, this is a cumbersome step. I want that when I'm identified with my payment credential, I'll automatically get my digital receipt being pushed into my wallet. And then I have it there. And once I can search for it, and once I really need it for warranty aspects or whatever, with this paper, you never find the proper receipt, and it's really a burden for me. Or you need it for expenses or whatever, So I think here a wallet proposition taking care of this is everything. For me, it's a value-added services around wallets. If you have the user interface, I think that is what we are discussing. For a bank, it's very important to own the user interface, and then once you have this, and you can then have this additional customer experience, customer journey that Alex was mentioning, and bring this. And this digital receipts is one, but it's for sure it's also could be loyalty, etc. Other features around the wallet. So, and I think banks coming from the payment side, also from the business pressure, need to think about these additional experiences, because in these additional experiences there is also a commercial benefit in it.
Absolutely. Alex B, I want to get your take here on this, embedded finance, but also the reality of non-finance brands getting into the industry.
Yeah, I think we'll continually see sort of non-traditional players enter this kind of market because the barriers for entry are really quite low. And I think what we're seeing now, I mean, especially in the gaming space, is companies almost becoming able to offer embedded finance without ever intending on doing so. Yeah, I mean, you just have to look at the amount of money that's spent. EA Sports was never designed to be a payment company, but fast forward to 2022 and the billions of dollars that are going through their games every year. I think the one thing what banks have and what they've always had is ability to do this because they're very well capitalized, and they've got the infrastructure as well, which as you get larger and you get more customers and more billions of dollars, you're rightly subjected to more regulation. Now, banks have been used to this for eons. Newer finance companies, less so. I think we'll see more partnerships. I think we'll probably see more kind of powered by statements where I guess more innovative companies who are selling something or providing something, or even from a consumer receiving money, for example, receiving funds for a job that you've done, for example. I think we'll see a lot of kind of front end stuff being very much in sync with the vehicle that's driving it, but then powered by bank technology because it's already there. It already meets relevant standards. Don't have to think about it. Find a way to join them together, and then you've got something which is both customer centric and meeting whatever country standards are in place.
Absolutely. I think to give another plug to Curve, you have Samsung Pay powered by Curve. I think that is the partnership branding I think we're going to see a lot of. Alex, while still staying on you, I want to ask a question which I'm sure you get asked all the time, but let's try and unpack it and break it down in a bit of an interesting way, which is should banks be more afraid of the fintechs, i.e. the small little ones that are able to kind of do certain things that they perhaps can't, or more afraid of the big bad Amazon, the big techs, the likes of Apple Pay, the likes of Apple Credit Card entering the fray? Which of these would you think is more of an existential threat to the main revenue streams for banks?
Yeah, it's a great question. I think firstly, I think innovation is, and competition is just it's you can't not have it. And from I'm a consumer as well as you guys. If there's no competition, the market stagnates and you're left with poor choice and poor options. So there's absolutely got to be continued competition in the market. I think certainly the fact that fintechs exist in the financial space, I think is brilliant, because they've got a very specific mission to create something, and they get the freedom in order to be able to do that. And it's very much customer first, which I think we continually see. And I think banks have thrived either with that, because they've been able to have a look at something happen and replicate it, and then customize it and tweak it and then deploy it, or they've been able to say, hey, thanks, we'd like that too. So come on board and be a partner. I think the Amazon and Apple Pay, very, very huge potential to kind of capture market share in that space. I think in terms of where that market share will be won and lost, I think a lot of the companies rely on intermediaries in order to be able to process the card payment. So there's a lot of parties involved in payments, and there's a lot of kind of margins that are taken along the way. So I mean, it's difficult to. Do I worry about it when I go to sleep? No, I've got much bigger things to worry about in my own life, let alone what's going on out there. Will I take up an Apple Card? Yeah, I'm sure I will, to kind of try it out. I think it gives the consumer choice, and that's definitely a positive thing. And it will force everyone else to look at the journey, look at the end-to-end, look at how many clicks and how many scans it takes to make a payment. That's now best in class. The bar's been set. Everyone else needs to now try and meet that bar, and then I think consumers will make their choice as to what's easiest for them. And I'm sure that a lot of banks and a lot of other companies will be continually putting themselves through that assessment.
Competition raises the bar. That seems to be and raises the expectation.
Definitely.
Alex, obviously, I heard that Gatiragas is, correct me if I'm wrong, but likes to think of itself as a 170-year-old fintech.
Right.
Which I appreciate that as a term. Where from where you're sat, where do you see this in terms of that existential threat to banks? And is it a positive thing to have that sort of continual threat coming in to keep competition on its toes?
Well, absolutely. I mean, that's how you drive innovation in the industry, is looking what others are doing. And reality is that a lot of these big techs are quite innovative. They've captured the mindshare of their customer base. They've got great UXs, great customer experience in how they engage with their apps. And that's something definitely banks and fintechs are learning from. So I don't think they should be afraid, but they should not ignore it either. It's not going to go away. And I think a lot of the banks and fintechs are looking at what these organisations are doing to, at least mirror some of those things, particularly the successful initiatives. And then also maybe look at opportunities to leapfrog it as well, because I think, as Alex mentioned, these banks have a history of engaging with customers. They've got deep pockets, and they can sort of look at quite innovative solutions that they can release as well.
Kurt, where do you stand from the slightly younger than 170-year-old fintech perspective?
I think I have a clear position. For me, it's if you ask this question straight, should the banks be more afraid of fintechs or big techs? I would say it's clearly more afraid of the big techs. On the fintechs, we have seen, there was a recent publication, the traditional banks are catching up. So in user interfaces and rating of user interfaces, banks really catched up, and what has been good in years only at these neo banks or new stars rising, you know. Also from the traditional banks, you get nice interfaces, nice functionality. All this is good. So I think it was good that there is challenges, and then looking to the consumer experience, etc. For me, you know, now Apple going into buy now, pay later, for example, and delivering more functionality, there will be, for me, more competition from the big techs. But what is making me a bit more concerned is what is the data that big techs have. And big techs, they do know about the customer, they have the customer identity, and they have customer behavior, which will be important for risk assessment. So I believe with these assets in their pockets, this could be, so to say, more challenging for the traditional banks, what we will see in the future, than from fintechs. Fintechs are good on new ideas, but this is a bit more on equal level play. But with big techs and what they have as data in the back, I think that could be more challenging.
It's an interesting data point. I'm following very closely Apple's acquisition of Credit Kudos, because it seemed that as soon as that happened, everyone that was a customer of Credit Kudos, I don't know the full details, but I think that they're not being renewed. So it does seem that everything that they can do is being done for Apple for buy now, pay later, and be able to have that very detailed credit scoring. Yeah. It's definitely, although fintech is the only company, or probably the most well-known example of Square taking on the big, or Amazon trying to take on Square in the payment space, and Square not engaging in a price war. And there's a fantastic book by Jim McKelvey called The Innovation Stack, and it is all about Square and how they managed to see off that big tech threat of Amazon. Cool. I want to go down. I just want to touch on this slightly. I don't want to go too deep into this because this is almost its own topic in its own right. But I want to just briefly touch on central bank digital currencies. When this becomes, or even if this becomes a reality from a European perspective, do you think this is going to have much of an impact in digital wallets? What's everyone's thoughts on that? So I'm going to throw this open to the whole panel. If anyone needs to come sort of weigh in.
I might start, if you like, Ali, with the first part of the question. I think it's a matter of when, not if. We obviously have a currency technology division where we still issue currency through central banks around the world. And we also have a central bank digital currency capability as well, where we've had some success with some central banks in starting some pilots. From an EU perspective, being only fairly new in this region, I've obviously tried to keep up to date with what's happening. And from what I understand, it is still in this information gathering stage, if you like. They're still going through the investigation of it before they start to think about some pilots and some testing. So, you know, we're still, I think, quite a few years away. And also from your second part of the question, it will obviously have an impact to digital wallets, but what that will be exactly, I don't know. Will central banks have their own wallet? Will they rely on commercial banks' wallets to issue it? I'd hate to predict, but I would suspect it would be the latter, that your central bank digital currency will just go into another wallet.
I agree with that. I think the container for it and the user interface for a digital currency is the wallet. It will come to the wallet, and then I would assume that the banks will do the user interface and will integrate CBDC functionality in their wallets. And coming to my previous points, I think it could be challenged by big techs But definitely, I think the channel bringing CBDC would be the retail banks primarily. If they understand to take this position, I think partially the retail banks are a bit afraid of that central banks will then own this process, but I think central banks are not in the interface to the consumers. So I would see the role of retail banks very strong in this, and then bringing digital currencies forward via user interfaces controlled and managed by retail banks.
Absolutely. Alex B, did you want to weigh in here?
Yeah, probably just slightly. I mean, yeah, so certainly, you know, the ECNY from China has kind of had its pilot sort of run out at the Winter Olympics just gone, and you know, moderately successful. I think it would be interesting to see how you know, what the take up is. I mean, certainly, you know, there's a lot of use cases that makes sense. I think it's kind of something which sort of, you know, I guess if you look at the you know, if you look at international trade and trade flows, you're going to really get the best result if a couple of highly connected countries sort of in parallel are able to launch an interoperable interreceivable CBDC, because I think there's very limited use cases that are relevant for, you know, kind of P2P, given you know, given the existing tools and functions that are there. But then I think the devil's always in the detail. But I think it's great to start to see some of these technologies being piloted, because I think that's where things can be shaped. It's inevitably going to feel a bit different, going to be a bit clunky when you first launch, and I think that's fine. I think the path's quite clear, and from our perspective, we're actively looking at, you know, at interest as to how that launch is going to be, how it might enter into Hong Kong, how it might enable that kind of payment within Hong Kong. So very much live in terms of looking at it, but, you know, we're still not quite ready to start making, you know, build on it, for example, because we don't really know what we're quite building for. But it's very interesting to kind of be close and watch, and I think it's going to be a big part of the future.
And it's a very valid reason to not be building stuff right now if you're not quite sure what it's going to be.
Always got lots of things to build, so yeah, you know, it's yeah. But I guess as well for us, yeah, we want to make sure that when it's there, we can consume it. So when we're looking at our builds now, we do run some future proofing, not tests, but, you know, kind of internal scenarios where we say, okay, well, if these things are maybe likely over the next 18 months, what's our confidence factor on the scale of change required in order to be able to embed? You know, we have a lot of microservices in terms of how we built our wallet, so it's always something which we're looking out for.
Let's continue that discussion around digital wallets. I want to bring in payment tokenization and what this means for digital wallets, but also how can banks? I mean, banks are known for you're known for trust. That's what it comes down to. To go on of the day, I mean, people. I think I'm going to paraphrase and butcher this quote, but I think the quote was, "People are more likely to get divorced than change their bank."
Yeah,
so. Against this backdrop as well of payment tokenization for digital wallets, how can banks use their trust that they've had over the last couple of hundred years to succeed in this new world?
I think trust is very quickly lost, and I think we kind of touched on the data point earlier. I think consumers are ever aware nowadays about how their data is and how their data is being used, and it's, you know, data's even got the potential to be a disadvantage if you kind of know too much about your consumer. If your consumer doesn't want you to know too much, or you have to tell them exactly how much you know, and you have to tell them that we're going to use this to advertise stuff to you, and we're going to make money from you. I mean, it's a very interesting topic in itself, but I think most banks today in most countries have got kind of an established position in the market. They've been there for a number of years, well, probably a number of centuries. So from a consumer point of view, there is that feeling that, okay, this is here to stay. It's not something that's going to be set up today and gone tomorrow. So I think largely banks can leverage that position of trust by looking at how they deploy and how they partner and how they innovate. And I think that's a great position for a bank to be in, because it doesn't need to do anything to generate that trust, but I think it has much more of an inherent responsibility to protect that trust, and to really think whether what they're doing is going to be the right thing to do. I guess buy now, pay later is a really interesting, example of that. A lot of markets in Asia and in Europe have seen maybe smaller buy now, pay later players, attract the wrong kind of publicity, because they're enabling credit to those who wouldn't ordinarily need that credit, and they're having large write-offs, and they're putting people into even more financial difficulty. And I think then for banks to offer that, I think it's a challenging question about how can they be nimble and extend credit over and above where they might usually, without ensuring that their responsibility to the customer is put at risk. A tough question, but I think everyone needs to. All banks will be very aware of the environment that they operate in.
That's a very good point around, well, the credit scoring with buy now, pay later, and it's a very like Google before you find some incredible examples. Alex G, can I go to yourself first of all about what payment tokenization means for wallets, but also how can banks use their trust in this new world?
Definitely. Most of our activity when it comes to digital wallets and payments is around tokenization. So we help a lot of the banks and fintechs light up the pays, if you like, and also have their own issuer wallet. And from an end user's perspective or an end customer's perspective, that's been something that's been in the background, and so it should be. It's kind of the silent achiever, if you like, that's protecting their payment credentials. But what we're seeing now is a lot of interest from our customers, the banks and fintechs, in providing additional tokenization services to their end customers in the form of visibility, first and foremost. So where is my tokenized details? So I have a payment card. I've pushed it into certain wallets. I've pushed it into certain merchants, and giving those customers the ability to see where their payment credentials are stored in an easy fashion through the wallet, and also to be able to take control as well. So not only being able to push it, but also potentially being able to suspend the token or delete the token. So I think the magic word again was trust, and the idea here is to actually give the end consumers the trust, or further trust in the payment ecosystem, by being able to manage where those payment credentials are. So we're putting a lot of focus in, I guess, taking tokenization from the back server room and pushing it into the front of the wallet now for consumers to be able to take advantage of.
Absolutely right. That's two Alex's opinion on this. Let's get a Kurt's opinion. Kurt, where from your perspective, well, obviously on the trust element with banks and what they should be doing to leverage this, but also the tokenization within the wallet.
Yes, I'm happy to comment to the two Alexes. First on the token side, and then on the trust side. And token and trust is, I think, good related. But let's start with the token side. So what Alex was mentioning, I think is very important. In the past, this process was really in the background, not visible. Now, if I would ask you, for example, where would you know where your payment credentials are stored, to which merchant? So I'm I'm referring to this card on file that you typically, when you enter your payment credential, you can say, save this for the next time. I would not know personally where I have stored my payment credentials in the past. Now it comes that this tokenization is going from the normal pays also to the merchant side in this e-commerce situation. And this has huge advantages because of simply then having the card stored or card on file on the merchant. It is really then connected end to end from the merchant back to the issuer with these network tokenization principles. And Alex, G&D and us, Netcetera, we are really closely in this topic, working on this and delivering solutions. And with this end-to-end connectivity, what does this mean? The issuer knows where your payment credentials, your tokens are stored. You can manage this in your wallet. You can see this. You can provision this with push and pull provisioning. You can say, well, I have here a payment card. Here is a merchant app. Do you want to register your payment credential to this merchant app without entering all this PAN and all this information again? This has here really huge benefits. So this provisioning, this token cockpit, this replacement, this end-to-end connectivity that allows then also life cycle. If your card expires here, usually every month your card expires in 36 months. So every month 3% of your card expires. So it doesn't work that your payment subscription is stopped working. With this tokenization, you get a new token, or there's the connectivity, you get a new replacement of your payment credential in the back automatically. So for me, this will ease the life of everyone, for the merchants and the issuers and the consumers dramatically. So this is, I'm really fond of this tokenization topic. To the trust topic, I'm from the age that has more trust in the traditional bank. So, and for me, I would also, what Alex said is that the sharing of data, to whom would I give my data? I'm also here a bit of split responsibility. So I would give my financial data and want that my bank has this, but my other data where I'm traveling, whatever, I'll have this data with my big techs and in my whatever with Google or Apple. And for me then, this separation is nice, and this trust in financials, but this is my age and generation, whatever Z and generation Alpha might be different because they don't think that much about this. I need to have this trust more in traditional banks. And I think that is a huge value that the banks have, and they need to offer, so to say, their service offer based on this trust. So I do have neobanks accounts, but still my main money, is with my traditional bank. So this is for me this trust topic.
I want to unpack that. It's interesting you say that about how your main money is still, with the traditional banks, because to be a bank now, there's a lot of things to think about. I think it is sort of safe to say, and increasingly more and more things which are becoming almost. You would almost think it's becoming a bit of a barrier to entry, but yet we're seeing market share go to sort of some of the smaller and mid-sized banks. So kind of against that these large projects that is almost expected from big banks now, what are the opportunities for mid-sized banks and the smaller banks within the actual digital wallet? What are some of these sort of smaller players doing in this space at the moment that's sort of quite exciting? Alex G, I'm going to go to you first.
Okay. I think being a smaller bank, a mid-sized bank, I think they're a little bit more nimble, probably more willing to take some calculated risks in what markets they enter as well, and what sort of products they issue to their customers. So the opportunities there are maybe to look at some niche offerings with respect to certain demographics in the market. I, a little bit like Kurt, also do rely heavily on big banks, but they have some products that they can't actually issue. So I am also a customer of some of the fintechs or some of the neobanks as well, because they have again, specific products that I think make my daily life a little bit easier too. So yeah, I think the mid-sized banks will definitely look at opportunities for certain products that meet certain demands in the market. Also look at certain commercial models and how they go to market as well, be it a subscription model. They may not have home loans, for example, to be able to actually get a lot of their revenue base, or their funding models might be slightly different to some of the bigger banks. So again, they might look at different monetization models for how they go to market. And from a go-to-market perspective, I certainly have found in talking to some of the mid-sized banks here in Europe that they're more willing to partner with organisations when it comes to the technology rollout as well. So look, the big banks also outsource, but reality is some of these mid-sized organisations don't have the R&D teams internally to roll out products themselves. And they lean heavily on organisations like ourselves and Kurt's to roll out some of the new tech.
Kurt, do you want to weigh in there in terms of some of the tech that you're rolling out as to some of these mid-sized banks and obviously what they're doing in this space?
Yes, I think we have a lot of mobile wallets offering out, and what we provide to them is a white label mobile wallet. So it will be then customized to their needs. It will be in their design with their proper functionality. We have a kind of concept of like a Lego concept of having some building elements, and a wallet, a bank can then decide of which of these building blocks they want to incorporate inside a wallet, and then also can add on individual functionality, which is important for them to differentiate. So it is not a standard product, you know, one color and everything, one functionality fits all. But what is really nice for these banks is that they don't need to maintain and develop all this functionality themselves. So with having a good partner, cooperation partner, white label wallet provider such as us, I think these mid-sized banks can have very appealing proposition in the market, and also can play in the same league like these big banks.
Absolutely. Now, Alex, I'm very curious on your opinion here, because you're sort of operating a small organization at one side of things, but also part of a large, pretty big bank from what I gather.
Yeah. Yeah, we're fairly big. Yeah, so I think looking at how PayMe was stood up, I think the bank the bank recognised that innovation is not necessarily its strong suit, albeit there's not a lack of people who can be and are innovative. So certainly there was a strong use case in Hong Kong back in 2017 when PayMe was set up, about solving payment between people, and there were bank transfer, but it's the same. It's pretty much the same as bank transfers now. You have to log in. You have to find your payees. It's not customer centric. And I think other parts of the world had got P2P wallets set up. So I think in terms of mid-sized banks copying the approach, we were lucky that we had the relevant funding. So we didn't need to consider whether a white label product was necessarily cheaper or better, but we sort of followed some very stringent principles around scaled agile to make sure that we could design with a customer in mind and release often so we can get a product out and then innovate. And we've kept PayMe deliberately small in terms of its footprint. So yeah, I think that allows that continued design, innovation, and a sense of ownership by the team as well, that they are responsible for this. And it's a great feeling when you see something that you've designed, deliberated on, go out and get used. And the growth in PayMe has been phenomenal. I mean, we've got 2.7 million customers. We capture over 75% of all P2P payment in Hong Kong from, I guess, a company that's only just 5 years old. So I think being aware of your market, being aware of the use cases, being focused on the problem that we're trying to solve, finding some delivery principles, sticking to them, and putting the customer at the heart of everything. I think those things, and it's no secret ingredient, because these are talked about in business books and TEDx talks all across the world. But those things are really what helped, I guess, PayMe be launched from inside, a large global company.
Absolutely. That's before I come back to you on that sort of relationship there, I just want to go to Kirk, because the last kind of question that he just brought up a few members ago. The last question I want to put forward to the panel is it is about partnerships, because we're in this ecosystem where nobody is an island, nobody is a castle. Everyone is part of this forest and a lot of interconnectivity. And this sort of ecosystem of fintechs, big techs, banks, operating across multiple different touch points within the same industry. How could you possibly do that without partnering? How important is partnering going to be moving forward? Kirk, can I go to you first, because you were already starting to touch on this?
So I think we discussed it. It is a key. It's not only important. It is how to survive, in the future, because when you look to the offering, and the definition of the wallet where we're coming from, it is if you just look to the payment side and just whatever you manage a credit card, maybe the bank can do this alone, and then it's okay. But when we look forward and delivering a full customer experience, customer journey, delivering all the customer needs, then we have more than just this payment card or sending money from A to B. And then we have all other use cases around the payments, value-added services, etc. Financing, lending, insurance, installments, whatsoever, personal finance management. For example, for personal finance management, you need to tend to look into your other accounts that you have. You can't do a good personal finance manager if you just look to the one bank account, but you have two more. So, and for this, you need then the interoperability with open banking, open APIs that will be incorporated. So this is part of this cooperation, that you have open banking, now also moving to open finance. And for me, for example, if I go back to my example, what I'm missing most is this digital receipt topic. A bank themselves, they can't manage a digital receipt topic alone, because this needs to be interlinked with the merchants. The merchant need to provide this data, and then whatever, they have some provider, and then send it to your bank wallet. So you can't do this alone. And therefore, I think it is not strategically important. It is really, as I mentioned, it is for your survival in the future, to say it very hard, or let me say it is for utmost importance that you do proper corporations, you do them well, and to look into what the user needs, the user journey, to have more use cases, and then based on these extended user journeys, do the proper corporations if you are a bank. So for me, it's a clear go for corporation.
Very, very well said, Alex. Alex B. No pressure following that. how do you sort of see that again, moving forward? How do you see the importance of partnering and partnership?
It's absolutely huge. Just to touch on something you said, Kurt, about the digital receipts. So we do digital receipts because we offer both a merchant proposition and a consumer proposition. So you go and pay for something using PayMe. You both got all the details you need. There's no receipt generated. So it's great to see that ecosystem exist. But yeah, partnerships are absolutely vital, I think, to any fintech's success. And I think the market's really shifted. I think there's definitely much more of an openness now in 2022 than I think there's ever been before in that space, because I think everybody's really seeing how the benefits of collaboration and proper partnerships where you're buying into services. Certainly from a PayMe perspective, we partner with a lot of third parties to support either our infrastructure or our capabilities. So whether that's partnering with a merchant acquirer, for example, who they've got the ability to go out and onboard merchants one by one. Great, they've been doing it for many more years than lots of people in the market. Makes perfect sense for a partnership. And even a lot of the sort of the back end services that we run in order to be able to enable payment for everyone. There's a lot of microservices that are supported and provided by third parties, by partners. So I think it's vital. I think unless you're prepared to deliberately close off your architecture, and maybe you have a reason for that as a company, and if so, fine, that might be great for yourself. But I think having that ability to have open architecture is only just going to enable the use cases that you've even not thought of at this point. And you're not going to hamstring yourself even 6 months down the line when the market innovates and you find yourself being left behind. So yeah, partnerships vital.
Absolutely. I think it's I'm trying to think of a counter argument for partnering, and unless you're an absolute monopoly, I'm really struggling to think of a particularly good reason not to. Lastly, I'm going to come to you, Alex G. Obviously, Gatiragas Toronto is working with partnerships literally across the globe. So from where you sit, how important is partnering going to be moving forward? And can you think of any negative reasons to partner?
No, I can't off the top of my head, to be honest. Maybe there is some, but look, I can completely concur with what's just been said. Partnerships are going to become critical. Partnerships in the form of what Alex mentioned before, which is powered by. So, maybe partnering with organisations that have trust in the brand in the market, and you could leverage that brand. But also partnering with, technology providers as well, so licensing their technology to get products to market quickly, take advantage of new innovations and so forth. So, there's no doubt, banks of all sizes will look at partnering moving forward. And as Alex just mentioned, I think having that open architecture within your own systems is very important to be able to plug in these capabilities. And look, the industry is moving that way. Open banking, open APIs. It's all about what sort of enhanced services can we provide our consumers, our customers, and partnerships will be key to that as well.
Excellent, very, very well said. Well, guys, thank you all so much for taking the time to speak with us today. I always love these because these are the kind of things where you get those little quotes that you just cannot Google and they sort of stick in the back of your head, which is fantastic. Kurt, where is best to find out more about yourself and Netcetera? Where's your best communication channels of choice?
I think our main communication channels is clearly on social media. I would say LinkedIn. We are doing a lot there. For sure, web is still important. And some newsletters. But for us, we would be happy to share also some of what we discussed here via our social media channels. Absolutely.
Alex, Alex B, where best to find out more about yourself and this little company I've only just heard of? This HS, what was it? Sorry.
Yeah, HSBC. Well, I mean, if you're watching this and you're in Hong Kong and you've not heard of PayMe, then what have you been doing for the last 5 years? If you want to get in touch, you can follow me on LinkedIn, and if you want to connect, very happy to chat.
Excellent. And Alex G, where best to find out more about Gatiragas in the front?
Again, social channels is the best way. We've got a fairly comprehensive website as well, and we've been fairly active in events as well. So please reach out to us, whether it's at an event or through our social channels.
Absolutely, it was good seeing your team out at Money 2020 as well recently. That was fantastic. Yes. Well, thank you all so much. I've been your host, Ali Patterson from Fintech Finance FF News. We will see you all very soon.